Welcome to today's webinar. Hopefully, I'm going to check with our tech people. Can you see my screen there, Roy? Hopefully you can. Yep, fantastic. Okay, thank you very much for joining me. So today's presentation, I'm super excited to give because I think there are some interesting stocks or equities in some fascinating sectors and industries. They're very tradable right now. So I'm going to cover 6 or 7 of them, the cross section of them, look at some levels, look at what's trending, and maybe you'll find some trading opportunities within that. Before we get really into the meat of the presentation, though, just standard risk disclaimer. You've probably seen this type of thing a bunch of times. It's essentially saying that, first of all, today's webinar is really for educational purposes only. It's not to provide trading signals. And there's obviously a risk of loss whenever you're trading any kind of an asset class, especially a leveraged product. Okay, so with that, a little bit about myself. My name is Huzefa Hamid. I am one of the senior analysts at dailyforex.com. I'm a Forex trader and a futures trader. I trade some equities as well. The majority of my trading is Forex majors, so major pairs against the US dollar, some futures contracts, natural gas, crude oil, E-mini S&P 500, and I trade the occasional individual stocks. But I think the most important thing I can tell you about myself is that I use technical analysis for my decision making. Now, that term means different things to different people. So for me, what it means is I use the price chart and I don't use economic data. So I don't, for example, look at interest rate announcements or employment numbers, etc., to trying to figure out where the market might go based on that fundamental information. I do look at the earnings calendar because I'm interested to know what announcements are coming out and how they can drive liquidity, but I don't actually analyze that fundamental data to determine market direction. I happen not to use any indicators myself. I just use support and resistance and look at various chart patterns that may pop up on that particular pair or stock I'm trading. So you'll see that in a second. I try to keep it very simple. I'm based in Toronto, Canada, by way of England. I'm born and raised in England. I moved here about a decade ago. I'm interested to know, I know we have some people in the Zoom room and some people on Facebook Live. So I'm interested to know where you're from. Just let me just type in the chat window the country or the region you're from, or the city even. I'll be fascinated to know what time zone you're in. All right, some people from South Africa here and a couple of other people popping up. Okay, I'm always trying to see if anyone is in my hood, my neck of the wood by Toronto, somewhere nearby, but it's never the case. I always seem to be projecting out to an international audience. Nice to meet you there from South Africa. I don't know your name. You've dialed in as a number, actually. So, hi, David. Nice to meet you. Thanks for dialing in. Okay, let's get on with this. We're running a little bit behind time. It's okay. Hot stocks and how to trade them. So I'm going to get into some specific stocks, but we're going to focus on 7 stocks in 3 different sectors. The first sector is going to be electric vehicles, EVs. The second sector is going to be semiconductors. And the third sector, we're going to look at a single technology stock. So let's start with the EVs, and we're going to look at the daddy of EV stocks, Tesla. So I want to take a step back and look at a long-term chart of Tesla. This is still a daily chart, so there's plenty of detail in there, but this is going back. I've compressed the chart, and it's going back to just before 2017, so around the end, last quarter of 2016 to present day. So you can see it's in recent years, 2020 onwards, it's really had a meteoric rise. So the stock languished for a fair bit. So beginning of 2018, it was around the $62 mark. Beginning of 2019, really is unchanged. It was just trading in this range of $61. So it wasn't moving. And beginning of 2020 is when you started to see it trend up. So 1st January 2020, or 2nd or 3rd January, the first trading day of 2020, the stock was at 84.69. And one thing I found interesting is when it did start to break out, it moved up a fair chunk. Within a few months, moved to $200, and then
immediately dipped. Now, dipped down to the $77 mark. Now, if you look to see where it dipped down to, it kind of went back down to that previous resistance and tested it as a support. Now, you're going to hear me talk about that a lot. And whenever I do weekly market analysis on a regular basis for daily Forex, and I'm always looking for these support and resistance plays. Now, even on these long-term charts, they still work out. So that's a great buying opportunity. Not so long ago as well. We're talking about March, April 2020. And then it peaked out at $900 and a few cents with a market cap at that time of $850 billion. So that was around early, I think it was March, April, or February, March 2021. And then it's had this very erratic move since. So let's zoom in and see if there are any tradable opportunities where it might be going. So now we're going to, again, this is a daily chart, but now we're zooming into the last 12 months approximately. And there's a couple of things that I'll point out, or things I saw. So this is the all-time high around that $900 mark. You see, made a reversal, and it popped back up for another peak, but a lower peak. So you've had a lower high. But for it to be in a bona fide downtrend, not just a lower high, I wanted to see it break the most previous support. So the support it made was around $539 there. And it made that support, came up for a lower high, but it held that support around May, June this year. And since then, the price is very much stabilized. Now, just zooming in a bit more again, now this is the 4-hour chart. It made a small resistance at $623 and then tested that as a support. And then again, a resistance at $698, call it $700 roughly. Tested as a support briefly, broke it. Now the price, I took this screenshot yesterday afternoon. So yes, as of yesterday afternoon, it was trading above the $700 mark. So for me, to be bullish on this stock, I really want to see it stay above that $700 mark. Nice key psychological level. I think any break under $539 is a fair ways away right now. When you break under $539, that support that I made in March 2021 this year, that to me would be a very bearish sign. Now, the next resistance is really going to break is at $780 mark, 781 from that resistance made in kind of April, mid-April. So I'm bullish Tesla, cautiously bullish. I want to see it hold that support above 700 to be, for me to continue remaining bullish. Any break under 539, I might even consider going short at that point. My one caveat with Tesla is from a fundamental point of view, it's really overpriced from an earnings to price point of view, the price earnings ratio. Now, going back to what I said in the beginning about not being a fundamental trader, Tesla is one of those stocks. It's really hard to ignore that. It's been in the news a lot. There's an asset manager by the name of Michael Burry, or Dr. Michael Burry. He runs a private firm called Scion Capital Management, but he became quite famous in the media when he starred in a film, or his character was played by an actor called Christian Bale in the movie Big Short. And, he was one of the people quite famous for shorting the housing crisis around 2008, 2009. And he's gone on to continue making money between now and then. But he's very bearish. He's taking a big short position out on Tesla. And that's given me pause for concern about the long-term viability, long-term upward movement of Tesla. So, but the technical picture right now is cautiously bullish. It's kind of stabilized. It's made higher lows, as you can see. But there's some resistance. It's got to stay above $700, and 780 is another resistance for me to be properly bullish again. Okay, so that's Tesla. Now let's look at one of his competitors, Neo Inc. I think this is a Chinese firm. I should know this, but it does trade on the New York Stock Exchange. Another EV company. It hasn't been around as long. So this is the entire trading history. I pulled up a weekly chart here to give you an idea. So it hasn't been around. It's only been trading since the company's been around prior to 2018, but it's only been trading on the market since late 2018. Now, it made a low of $1.19. You can see the volatility of the stock in late 2019, and it topped out at nearly $67 in early 2021 with a $96 billion market cap. So we're still talking at its peak. It was still a tenth of the size of Tesla. You know, Tesla stopped out at $850, and this is at $96, about 7 or 8 times less than the market cap of Tesla. And then again, just like Tesla, it's had an erratic move since. Now, you know, it's come off a bit, come back for another peak. Very similar to Tesla. And you'll find these companies in the similar sectors, even of different sizes, they will behave in the same way. Sectors tend to follow each other. So this is the weekly chart. A nice support resistance play. You know, you could have got into this stock around September 2020. Again, not that long ago, broke that previous resistance, came back down to test it. I think it was a perfect buying opportunity. Even with the move, the retrace in the last year, you would have still been well in the money if you'd bought into that stock. Okay, so looking at the same company, but on the daily chart, we have, this is where it peaked around early January, February 2020, came back up for a lower peak, similar to Tesla again, just seeing the same pattern, and it made a support in between to 30.71. So again, I'm going to say the same thing I said about Tesla, is that it's made a lower high there, but for it to be in a bona fide downtrend, I'd want it to see break that support in between 30.71. Now, I'm not as bullish of NIO as I am of Tesla. A couple of reasons. It's not been making the in between. It's not really been making a higher low. It's made this one higher low there at 38.66, but it went on to break it. Now the price as of yesterday was sitting below that 38.66 mark. So I'm more bearish NIO compared to Tesla. Break below $30. I think it's going to break $30 honestly, but break below $30, it'll be a bearish play. Tesla's so dominant in the industry. They've got such a march on other companies, you know, even regular, and we're going to see this, even regular automobile companies in the electric space, you know, the battery technology, all of that. And now I know I'm talking fundamentals again. That's not really where I make my trading decisions. But I think NIO is bearish, even though I mean, look, sectors do tend to follow each other a fair bit, but I think at some point you're going to see them diverge as these companies start maturing. There's this resistance that's worth keeping in mind, 46.38. If it breaks that, then yeah, I'd take another look at it. But right now, it doesn't seem to be wanting to go in that direction. Okay, XPeng Motors, ticker symbol XPEV. Okay, another EV company. Again, this hasn't been around that long. This is the daily chart going back. We're going back a year now. I think that's the entire trading history for this stock. Okay, low 17.11, a high of $75, roughly $74, $75, a $54 billion market cap. So these companies, even though they're 7, 8, 9 times 10, you know, less than Tesla, this is a good 15, 17 times smaller than Tesla at its peak market cap compared to Tesla's peak market cap. They're still sizable companies. They still have market caps in the tens of billions of dollars, but it really took a tumble since that peak market capitalization in December 2020. You know, it went all the way down to around $20 around there, $20, $21 roughly. And you can see there's a support and resistance play. Really, where I like to see where's the price broken out from. It typically gets tested as support, even though the price went up. We're talking about 5-fold almost, or 4-fold in the space of a month in November. You know, 400% increase in the space of a month in November 2020, and it spent 6 to 8 months retracing. It still tested that level, you know, just within like a few cents as a support. So you can mark these levels on your long-term charts and wait for them to arrive. And if you're looking at 5, 10, 20, 30 stocks, these levels will come around, you know, every couple of weeks or so. Going into the 4-hour chart, this is the channel I see it trading in between $34 and $45. depending on where it breaks out, it will be determined where I'm bullish or bearish on this particular company. Lots of volatility there, not terribly liquid, and you can tell it's illiquidity from just the amount of gaps. There's tons of gaps. I mean, it was less gappy before, but now it's just every other candle has got a gap in between. So not a terribly liquid stock to trade. Keep that in mind. You can get, you could take some losses just through gaps, basically, or some big wins if it gaps in your favor. But it just adds to the risk if you're buying the underlying stock, even going short the underlying stock. Okay, traditional automobile company. It is getting into the EV space. I think in about 20 years, all these companies will be more electric vehicle companies than traditional internal combustion engine companies. But certainly Ford is starting to make, for me, the big sign that is really getting into the EV space was when it's now taking its traditional kind of trucks, pickup trucks, F-150, for example, and making an electric version out of them. To me, that's a big sign that Ford is serious about getting into EVs. Monthly. Okay, so I'm giving this the monthly chart. And the reason I'm pulling up a monthly chart, this is going back all the way to 2000, is that recently it's seen some prices being at some important monthly levels. So it peaked out a couple of months ago at 1645 before retracing. Now, if you look at that 1645 level, it's a long-term resistance at 2004, 2010, 2014, 15. So where it made this candle, this candle, I call it, and some other traders, some other traders call it a pin bar, because it's, it's got a long wick. It's a sign of a potential reversal, not by itself. I always want to see, okay, well, where is that candle in relation to? Well, it's in relation to long-term, resistance areas. And lo and behold, the last 2 months have seen some big red candles. So in that sense, it's a big resistance for it to break. Looking at the 4-hour chart now of Ford, it has it's in a downtrend at the moment, and the support or the previous resistance that it has to retest 1362. I think anything below that is going to be bearish in my mind. And this is the next support is really going to break 1114. At that point, at 1114, anything below that, I'm again bearish. I'm generally bearish for the picture that I see at the moment. It hit this long-term resistance 1645. It's been trending down since. Hasn't really made much headway. Sitting below 1362. I don't think it's going to break above that again. I think it'll tap 1114 before it goes up. Okay, let's see. Intel Corp. So now we're looking at some semiconductor companies. Intel had a really nice uptrend from 2011. This is the weekly chart, long term from 2011 onwards. But from 2018, it is a mess. It's a big stock. You can't ignore it. If you're looking at semiconductors, it's really Intel, NVDA, and AMD. But in terms of importance, but in terms of cleanliness of trade, this is terrible. But just scrolling into the zooming into the daily chart, this is the level I'm looking. So if you're interested in trading Intel, honestly, it's not on my radar. It's just too messy. But if you're looking at trading it, I'd be bearish this stock if it sits under 53.42. Just before that level, the support was made. It gapped above it, and then hit its support again. This time it's pinched below it. Let's see what the next few trading days brings. But if it stays up below that level, I'm kind of done with it. Like, I think it's well, not done with it. I think it's a short opportunity is what I'm saying. I'm not bullish Intel, but the bigger picture is so bearish. It's really not one of my top stocks to trade. NVIDIA, clean uptrend, really nice from below before 2016, 2017. Yeah, there's some action for it. Late 2021, early 2021, it kind of went sideways there a bit, but really maintained that uptrend. I'm zooming into the 4-hour chart, broke the all-time high at $208, $209 roughly. In the last trading day or so, what I would love for it to do is to come back and retest that 208 level to provide a buying opportunity. I looked on the 4-hour chart, I went down to the 15-minute. It's just pointing straight up. It's not looking, it doesn't look like it's going anywhere really. It doesn't look like it's it doesn't look like it's going back down. So this is a very bullish stock. I think it'll continue to rise. But in terms of finding a place to get into the stock, I'd like for it to come back down towards 208. Now, I don't have a standing limit order at 208 to buy. I want to see it come. I'd like to see it make a support between where it is now at 220, 219 roughly, and 208. Come down, make it some kind of a support, and then buy into that support in the lower time frame. I like to trade like the lower time frame to be counter, come back to my bigger picture view, and then get a safer entry. AMD, advanced micro devices, and I think Intel's biggest competitor. Long-term chart, interestingly, is a very different picture from Intel. The very related companies. It's had a nice long-term trend. Yes, it's had an erratic move, but it's still maintained that uptrend. Intel really has not. Going into the one daily chart, so this was the weekly, now going into the daily chart. This is the level. 99.23 is the most important level for me. It's made this really nice, I should have marked in the chart. It's made this really nice base here, rounded bottom area. It's come back for a pause in the trend over literally from August to August. So from like a 12-month period, it's gone sideways. But within that, it's made some nice supports here around the $72 mark, if you can see my mouse. And hopefully, and it's made this nice rounded bottom, broke out of there. I believe it's tested this support at 99. It hasn't come all the way down to it, but it's retraced a nice fair chunk. This is what I want, I think, NVIDIA to do. Come back down, major support, and then moving back up. I think this is a great bullish opportunity. Of course, the next resistance isn't that far away. It's at 122. Has to continue breaking that, but otherwise, AMD is it will be, I think, in all-time high territories. That means no previous resistance to kind of get in the way. Okay, Cisco. I'm going to spend a bit of time on historically as well, because it was one of the big early companies out there with Yahoo and Google and these companies that quote unquote invented or fleshed out the internet. Now, Cisco Systems is the monthly chart going back to pre-1999. And here you can see the kind of the dot-com boom and bust. This is book there. It should read boom. The dot-com boom and bust. Now, since that boom and bust, you've had the bust was a 90% decline in its value in the space of 2 years, maybe. About 2 years. Many companies got washed out, that they folded. Now, Cisco, one thing I would say about Cisco is, it made routers or routers, depending on how you pronounce it. It was it had a real business. It had physical infrastructure. It was selling to companies to get online. It wasn't one of these internet companies that was a shell or didn't have product, didn't have sales. This was a real business. It just probably got overbought. Then I believe it got oversold. Got overbought in the boom, and they got oversold in the bust. And the system has been making its way steadily up. Now, there was a peak initially at November 2007 at $34. It retraced again. It lost almost 2/3 of its value after 2007. This is the financial crisis, the credit crisis, had a really tepid rise, cautious rise, broke through $34 in November 2017. So it took a decade to recover, and then came back down to test it. This is a great support and resistance play. You get two possible entries, one in March 2020, and then again in early this year. Came back down to these. So mark these levels, mark these support resistance levels in your chart. They do come back to play, and you could have caught the tail end of this uptrend. There's so many signs in the long-term chart for you to have profited there. Even in the, this looking at the monthly, but you could have got in the weekly as well. But it's now broken this 2019 high of $58. Now, that's not the all-time high, but it might as well have been, because it hasn't seen those numbers since 2001. So it came back, it went up there to 2019, retraced, it's come back up. Looking at the weekly chart, you can see how, it's just now breaching that $58 level, going into the 4-hour. It's just sitting above it. If it can just stay above that, use it as a support, I think it's a great a great bullish stock. We're hitting and I think if it comes back down, it might find support at 56.66 or $57 or so. Now we're hitting 2:30 p.m. We started a little bit late. Just a quick, what are some of the best ways of buying or executing stock trades? You can buy and sell the underlying shares. You can trade contracts for differences, or you can trade options. They've all got the pro and cons. Like, so if you're buying and selling the underlying shares, you own the asset. There are no margin calls. Great for long-term investing. You can't always short if you're trading the actual stock. There's almost no leverage when you're doing that as well. When you're buying the individual stock, you might get 1 to 2 leverage, but that's maybe about it. Options will give you a lot more leverage. It's easy to profit on falling stocks, and you can do strategies to target price ranges. So spread trading, for example, where you can target a price range to profit on an option spread. There's a bit of complexity with the options, a learning curve. And when you're trading options, there's something called time value that can work against you. Options will expire at a certain date. CFDs, you get lower fees on non-domestic shares. So for the individual, say, for example, who are in South Africa, and you want to trade US stocks, CFD is a good way to do it. You get lots of leverage. There is some overnight financing costs as a result of that high leverage. And anytime you've got leverage, there's a risk of margin calls. When you have CFDs, by the way, there's no ownership or voting rights with CFDs. So keep that in mind. Invest Markets is one of the brokers we work with at Daily Forex. They're a broker that does have a decent CFD platform if you want to trade CFDs on any of the stocks that we've mentioned. And if you want trading signals, Adam Lemon, one of my colleagues, decent friend of mine, good friend of mine at Daily Forex, just go to dailyforex.com, you click on his Forex signals. They're giving 30-day free trial at the moment. Some final thoughts. Expand your opportunities for the best trades. We've looked at 7 stocks, but look at hundreds of stocks. You'll find some great trends in there. Always mind your risk. Trade with a stop loss if you can. Reach out to me anytime, Huzefa@dailyforex.com. We've gone a minute over. Hope you've been able to stick around. Thank you very much for joining me today. Take care, everyone. Bye now.